In this video, we'll be taking a look at the future analysis to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning trade forex like a professional, check out our complete forex trading course on Udemy. We have a promo going on right now and it's going to end in like a few days. So try as much as possible to take advantage of this deal if you're interested in learning trade forex. So today we'll be taking a look at about, let's say, 4 charts. The reason is because most of the currency charts are not properly developed right now. So we're starting with gold as usual. So this is a gold chart on the 2 hours time frame. Last week we anticipated a breakout from this small consolidation as a sign of a continuation. So we had a breakout and we had a move to the downside, which was short-lived at about 200 pips. So the reason why we had a bounce is because this price level turned out to be a good support level, which is one. And another confluence was price bouncing off of this trend line if you were to take out these lows, right? So you have 1, 2, and coming over here to make the third bounce. So I think this is the reason why we had this bounce off of these lows. But if you're able to get into the breakout trade as anticipated, or as we anticipated, you would have been able to catch at least 200 or 150 pips, as the case may be. So right now, I think the tides are turning. We might start to see gold become even more bullish because this sets us on the path to heading towards the all-time highs. So I'm going to adjust this real quick to show you what I'm watching out for to take advantage of the price action of gold this coming week. So if you adjust this channel, you can see taking the highs and the lows, we have something like this, a pretty interesting price action over here. So you can see we have 1, 2, 3, 4. So 4 good rejections followed by a good breakout on Friday last week, right? And we just bounced off of this good support level, which also aligns with this trend line. So I think there's a good chance we may be heading towards the all-time high. So I'm going to watch out for something like this, a move to the upside like this, and a follow through for me to go long. So in this chart, I wouldn't be going short for no reason, because like I said last week, gold has been bullish and it continues to be bullish. So if you take a look at this from a broader perspective, you would notice that this somewhat looks like an ascending triangle. So over here, all the way from November 2023 till present, right? You can see we have a good resistance level with 2 good rejections, 1, 2, and we had multiple bounce off of this ascending trend line, right? So 1, 2, 3. So it's a good chance we head to the upside, aiming for the resistance level, which would probably get us another rejection to the downside. Maybe on the 4th attempt we break to the upside, or probably break lower, but we're not there yet, so we wouldn't be working with this thesis. So we are simply interested in how we can take advantage of this price action this coming week. So going on to the 1 hour time frame, for example, because this is where I will be taking my entry if I was going to take this trade, right? Like I said earlier, I'm focusing on cryptocurrencies for the meantime, so I may not trade gold this week, or I may not even trade anything that has to do with the forex market, right? I may just simply stick with crypto. But for those who will be trading gold, following this bounce of this support level on this trend line, then the logical thing to do is waiting for a small consolidation to see how the market reacts on Monday, then go long, right? So when we go long, entry is going to be maybe here if we get a consolidation followed by a breakout. Stop loss, for very tight stop loss, it will go as low as this price action. But for me, okay, if I was to take this trade, my stop loss will probably be around these lows. Yes, I know it's a very wide stop loss, but sometimes you really don't need to pay attention to the risk to reward ratio, right? Because there's a slim chance gold comes to this price level. So even if the market reverses, let's say for example we do get a flush out from the market coming down all the way to these price levels, we can still range up and go higher. So having your stop loss around this price level is going to be a very vital, important, and key level to set your stop loss. And if this turns out to be the move that takes out the all-time high, that leads to gold price going higher, then this price level would have been a very good entry to get a good trade to hold long term, right, to make even more profit. So this is the reason why if I'm going to take this trade, my stop loss is going to be around this price level. So it doesn't mean price is going to get there, right? But just to be on the safer side, my stop loss is going to be there and my entry is going to be at the breakout. First target is going to be here, then I'll adjust my stop loss to entry to safeguard the rest of my positions, right? So the only reason why I'm going to adjust my stop loss to this price level is if we do indeed get a proper consolidation, right, before we get our breakout. So like this, then this will turn out to be a bullish continuation pattern. Then your stop loss could easily just be below the pattern, right, underneath these price levels. Entry is going to be around here and target is going to be around resistance level, as I explained earlier. So this is the only scenario where I'm going to set my stop loss underneath the consolidation if it happens. But if it doesn't happen, say for example I want to jump into a trade immediately market opens, I'm going to jump into that trade, but my stop loss is going to be around these lows, right? So the market may not give you time to think or time to wait for a consolidation before going long. So it's also okay to jump into a long position, right, if you have good risk management. Another reason is because if you take a look at these price levels, right, you can see we already had the breakout and it seems like we had a retest already followed by a bounce. So there's a good chance we may just, slowly grind higher without price giving you an opportunity for another entry. So that's it briefly for gold. I won't be going short. I'm only bullish on gold, and this is how I'm going to take advantage of this price action on gold. Moving on, we're talking about US30. So this is the Dow Jones, right? Excuse me. So Dow Jones seems to be in a massive bullish trend, right? You can see higher highs, higher lows, and all that. So right now, we seem to be within an ascending triangle, right? Excuse me. So we seem to be within an ascending triangle, the price creating higher lows and somewhat a resistance level. So for a bullish case scenario, which I highly recommend, right, in this kind of market, you stay bullish. I don't see why you want to go short right now, okay? I'm going to show you my bearish case scenario, but first let's take a look at the bullish case scenario. This is pretty easy because all we have to do is wait for, price to take out this resistance level. So the moment price takes out this resistance level, in my opinion, whether consolidating around the resistance level before breaking out or breaking out immediately, if I was going to take this trade, I'm going to go in aggressively because I'm going to have a good risk management. So entry is going to be around this price level. Stop loss is going to be around these lows, right? If you take a measured move, that's a pretty huge stop loss, I know, around 500 pips. But like I explained on gold, it doesn't mean price is going to get there, right? And risk management. So it's safer to set your stop loss here if we do get a straightforward breakout from the resistance level. So if you're going aggressive, entry is going to be around the breakout. Stop loss, best price levels to set stop loss will be around this price, and you trade your positions to go higher because this is clearly all-time highs. So you have no idea how high the price is going to get, and you have no idea how volatile it's going to be before we go higher. So that's why if you go aggressively at the breakout, you just can't afford to set your stop loss here because price could easily get a breakout, a wick down to take out, weekends and go higher. So if you're going aggressive, you have to give the trade enough room to breathe. That's why our stop loss is going to be as low as these price levels, while your take profit can be as high as 1,000 pips, right, or 10,000 pips as the case may be. So that's it briefly for US30 for the bullish case scenario. While for a bearish case scenario, similar principle applies. You simply wait for price to come down, consolidate a little, then give us a good bearish breakout. So if we get our bearish breakout, it is okay to go short, but minimum risk, right? Because this is clearly a bullish trend. So if you are going short, there's a good chance we may see price reversals from any price levels, right? Any mini support level. So like this price level could be a good support for price to bounce. Excuse me. This price level could be another support level price to bounce. So if you are going short, you have to be extremely careful and go with good risk management, right? So if this happens, I'm going to go short. Right, for a bullish case scenario, I'm simply going to go long if we take out the resistance level as I explained earlier. So that's it briefly for US30. Moving on, we're going to be talking about Nasdaq. So this is also similar to what we have on US30. I'm not going to waste much time on this. Bullish trend, higher lows, higher high, clearly a breakout from this resistance level, and clearly a retest, which led to a massive bullish reversal, right? Excuse me. So I'm simply going to wait for price action, but I'm going to be a little bit patient with this to see how price is going to react around these price levels before I go long on the breakout. So for this one, I'm going to wait for a good consolidation around resistance level to act as my confirmation when we do get that bullish breakout from the resistance level. So entry is going to be at the breakout. Stop loss, this one can be below the consolidation that leads to the breakout, because that's also going to be a good price level to set your stop loss. Then my take profit is going to be as high as possible, right? I'm just going to trail my position as we go higher, because there's nothing really realistic to measure the potential price movement when we start going higher, because this is clearly all-time highs on Nasdaq, right? That's US100. So for Nasdaq, I wouldn't be going short. I'm simply going to wait to see if we do get a reversal, right? Not until we get back to this support level before I consider going short. But for now, I'm going to stay away from going short. I'm going to focus more on the consolidation over here that would lead to a potential breakout to the upside in continuation of the overall bullish trend. And lastly, we're going to take a look at EUR-CHF. So this is the only good chart I could find on the currency pairs. So that's why I've included it in this video, right? If not, we would have ended this video with Nasdaq. So for EUR-CHF, the reason why I'm adding this is because we had a clear bearish trend, right, since the beginning of last year. Lower highs, lower lows, and right now we seem to have broken out from this solid support level. So this is the 4 hours time frame. I'm going to go down to the 2 hours time frame so we can clearly see what's going on down here. So we take a look at the 2 hours time frame. Excuse me. Oh, this is the 3 hours time frame. So 2 hours time frame, for example. So this is clearly visible. You can see we had a clear support level and we had a good breakout. So what we're having here right now seems like a bearish continuation pattern, but it is not fully formed yet. So all we're going to do is take these lows. So this is going to be our baseline support to see how price reacts when we get to this line. So if price comes here, consolidates a little and gives us a good breakout, then we go short, because this is going to act as a bearish continuation pattern following the bearish move from the breakout from this support level, and also aligning with the bearish trend we've had for over 12 months, right? So this is how I'm going to trade EUR-CHF. Mind you, before we get a consolidation to get this bearish breakout or bearish continuation, we could equally see price, going up gradually to make a retest before we go lower. So whichever happens, when we get that retest, all you have to do is watch out for a lower high and a lower low, then pick your entry if we do get bearish declines. So stop loss could be as high as this price level, and your take profit could be as low as 200, 300, 400 pips, or simply just trail your positions as we go lower. So that's it for this week's analysis. I hope this was helpful. Like I said earlier, the reason why we're not taking a look at so many currency pairs is because those chart looks messy right now. EUR-USD, GBUSD, USD-JPY, they are trading nowhere close to good area of values. So that's why I'm neglecting those charts. So hopefully next week, if those charts properly develop good price action, we're going to include them in our weekly analysis. But all in all, 3 good trades a week is more than enough to keep you in profits, right? 2 good trades a week is more than enough. Even 1 good trade a week, just make sure you are taking the right trades. So that's why we are limiting our weekly analysis to 4, 5, 6 charts as far as they are good trade opportunities. So that's it from me, guys. Once again, if you love the content, please like, subscribe, leave your thoughts in the comment section. If you're interested in learning trade forex like a professional, I highly recommend it. Check out our course on Udemy. You're going to learn a lot. And if you're not part of our Discord community yet, join our Discord. It's totally free. You can use the link in the description below. That's it from me, guys. See you next week.